Thank you for checking out Fieldman Rolapp Associates Municipal Market Update for the week of September 20th, 2021. Fieldman Rolapp Associates is a municipal advisor to government, and my name is Adam Bauer, and I serve as CEO and President of Fieldman Rolapp Associates. On the first and third Monday of each month, Fieldman Rolapp Associates releases a municipal market update, both in a video format like this, and also through an email PowerPoint summary as well. If you're interested in that, please email mseabrook@fieldman.com and we'll get you on a distribution list. On our first slide here, what we're showing is the AAA municipal market data yield curve, and that's shown in red. And that is as of September 17, 2021. And then in the gray bars, what that is the range the MMD has had going back to 2005. And so hopefully what you're noticing from this chart is that the red line is on the lower end of those gray bars, and that signals that we are at historic lows with interest rates. This looks very similar to what I showed folks on the MMU 2 weeks ago. I do believe the 1 year is slightly lower than it was 2 weeks ago, but not by much. On this chart, what we're showing is the MMD yield curve, the AAA MMD yield curve, and how it's changed over time. So the red line represents where it was 5 years ago, and that curvature you see in that line is a more traditional yield curve. If you look at the light green and the dark green, that represents 2020 and 2021, and you can see there's not as much of a slope to it. We have a flat yield curve right now. And the current yield curve looks very similar to where it's been about a year ago. And what we're seeing now is some signs that there'll be some upward pressure on rates, but really not much has changed in a year. Now, why is that? This first slide is the demand for municipal bonds. This is money that's flowed into the municipal bond funds. And other than that period of time where COVID-19 created a sell everything rally, we've really had a lot of money flowing into municipal bond funds. And up until recently, there's not been a whole lot of bonds to absorb all that increase in demand for bonds. And on our next slide here, what we're showing is the volume of municipal bonds that have been available. And that red line represents 2019 volume level. The light dotted or dashed green represents a 2020 volume. 2021. And then the darker dotted green is 2020. And after a very large volume week last week, we are now at 2021 is now at a very similar level as 2020. So that's a heavy volume year, but you see all that demand that's been flowing in. So investors have continued to show interest in municipal bond funds. So you have a lot of demand. You do have a lot of supply, but not enough that's been overloading the amount of demand that's out there. So 9/20 this week is also looking like a heavy volume week. It's dashed because that's not taken place yet, but maybe some of this supply will make it so there's less pressure, downward pressure on interest rates because there's a supply to absorb the demand. On our next chart, what we're comparing is a 10-year U.S. Treasury to the 10-year AAA MMD. And what if you look at the black line first, the 10-year Treasury has had a little bit of a drift upward, and you see that with that tick to the far right there. But the 10-year AAA MD has not experienced that. Now, if you go back to the February of this year, I talked to you a lot about this period where we saw, or just before this spike in the Treasury. I'm sorry, not the Treasury, in the MMD. We saw the Treasuries drifting upward and municipals were not reacting yet. And then all of a sudden, municipals made up for it very quickly. And that's what you see there with that big jump in that red line. So maybe we're in a situation like that now where you've seen the Treasury start to drift up, but not much. And you really haven't seen the municipal equivalent do much as in a way of increasing. But this is something to monitor. On our next slide here, what we show is some of the economic data that's coming up. These are things that, should they come in an unexpected fashion, could have an impact on rates one way or the other. On our last slide, we have our registered municipal advisors listed here. I encourage you to reach out to any one of them. They can give additional information about the market or specifics about certain deals that have priced recently. But I thank you for your time. I look forward to talking with you again in 2 weeks.